Hey, Joe, how you doing, baby? Oh,
I'm very good. I'm a little bit. I don't know how I feel about being on the big screen
I
behind you. I'm a
know,
little bit nervous.
dude. Whoa, it's crazy, bro. It's mad. It's like hearing me.
Crazy.
I think it kind of makes
I know.
sense. Wouldn't it make sense if I'm actually facing you that way at this TV?
You got two like angles, didn't you?
Yeah, true.
Potentially. Doesn't
Potentially.
matter.
Yeah, but how are you anyway? You all right?
Yeah, dude, I'm good. It's actually my birthday today.
Oh, it's today.
Yeah, today.
Oh, shit. Happy birthday, dude. Oh,
Cheers,
wow.
mate. Cheers.
I thought it was last week because you were doing something with your pals last week, weren't you? You went out
Yeah.
and Clapham.
Yeah, I went out in Clapham, then I went home to Winchester to see some of my home
Nice.
mates a little bit. That was really nice. Yeah. So
Have a
got
good
another
tear
piss
up?
up plan for tomorrow.
Yeah?
Exactly.
What are you up to for your birthday then?
Literally, just got mates coming around tomorrow.
Nice. Oh, mate,
So,
that'd be nice.
yeah.
Wicked,
I know.
G.
No, hopefully the weather will be good.
It's supposed to
Should
be
be
booming,
decent.
so you're going to be blessed. Good weekend. Nice, man. Awesome, dude. Well, I mean, you'd be happy you're not actually in this office today because it's actually a sauna. It's actually a sauna.
Oh, is it?
Yeah, man, it is hot, but yeah, we're going to try and wrap it up early and get out of here. Yeah.
Fair.
But
Don't blame you.
Yeah. Dude, all right, let's talk about this week. I mean, look, let's start off with dollar's been absolutely annihilated, for the fourth week running now.
Dude, yeah.
Yeah, it's been chunky. It's I measured it up over the last 4 weeks. It's some 4%, over 4% drop in the Dixie, which is quite substantial.
Wow. That's a lot in 4 weeks, yeah.
Yeah, and like I was just looking left of the chart. We're really close to paring back. In March when everyone flood to dollars, I remember so clearly because I was at Bali. And we had this huge pump of the dollars because of the COVID-19. We're almost pared back that now. We're just so close. Yeah. What's your take on the dollar this week?
Yeah, I mean, like you say, it's not just this week. It's been going on for a couple of weeks now. I think you've got to say one of the key things that's been weighing on the dollar has been the worsening of the coronavirus outbreak in the US. I mean, we've been saying this for weeks now, haven't we? But the numbers keep getting worse. I think yesterday it was another record high, 67,000 new cases or something.
Yeah, jumped 10% in a day. 10% increase.
Yeah. Dude, I know. It's insane. Deaths are going up as well. You're seeing states thinking about lockdowns or actually doing more lockdown, like even if it's localized, it's still more lockdowns, not good. And it's all just not good for the US economy, especially when like the Eurozone, China, here in the UK, doing a little bit better. So yeah, it just can't be good for the dollar.
Yeah, true. Sorry, I was just getting Dan to take a photo of me while I'm sort of recording this. I needed something for the Instagram. But yeah, no, it's true, dude. And I think one thing that I said about the dollar as well, I agree with you there massively. One thing that I said about dollar euro is, I think we mentioned it to the members this week as well. It's like, at the end of the day, if you look at Europe, they were so quick in comparison to US at containing the virus. Remember we had lockdown instantly, Italy and Spain. They were like, bam, all right, that is it. So I think we've done, the Eurozone's done well at containing it. So it's like, Euro, you've got to think as well, secondary is also a safe haven, right? Outside of your traditional three, the dollar, yen, and Swissy. So you think, okay, US are crippling at the moment, pretty much. Where else am I more likely to back? Probably Euro right now. Given the backing of the ECB, given this potential rescue fund, Euroball's going to have some fun.
Exactly. Like the ECB, we might as well mention the ECB because there was an ECB meeting this week. Pretty boring, to be honest. But like you say, the markets know that the ECB has got the Eurozone's back. And obviously, we can talk about this more in a second, but all the EU leaders are meeting at the moment to discuss this recovery fund. So the hope is that there's this big fiscal stimulus package on the way, which is another euro positive. So yeah, dude, like you say, things are really looking up in Europe, whereas in the US, the risks are much more to the downside at the minute.
It's true. Let's just quickly talk about that rescue fund because, I mean, at the moment, from what I've been seeing, the latest rhetoric, obviously they want to deal at the end of the day, they want to agree, but its talks are a bit of a deadlock due to their own, everyone's thinking about themselves at the end of the day. It's a bit of a political thing, ego, so on and so forth. But I think from what I've been reading, it seems like markets could be patient in terms of like the Euro balls. They could be patient for like a few days or weeks because they know at the end of the day, they're going to have to agree something. It's in their best interest, right?
Yeah. I think I agree actually, because it's like, if there is an agreement this weekend, I think that would be a big big euro positive. But if there's not, we have actually kind of been guided by a lot of these officials they basically said we want a deal by the end of summer. So that still gives us like another month, or even more than another month.
True.
So if we don't get it this weekend, I don't think there's going to be like a massive sell-off in euro. I think it'll be a little bit, euro soften a little bit, but there'll still be hopes that by the end of summer we get that deal. So yeah, like you say, patience, I think, definitely.
Agreed, yeah. And then obviously, still talking about euro, we had the ECB yesterday, on Thursday. A bit of a non-event, really, wasn't it? Obviously, they just met with expectations. They're willing to do more, got more firepower. Other than that, was there anything else that stood out?
Not really. I mean, there's probably not much point getting into this, but there's a bit of a discussion in the ECB about whether they're actually going to use all of their QE at the moment. This is like one of the debates at the moment. So Lagarde yesterday, because we're recording on Friday, she said that they are going to use the entire QE program. But I think some other ECB members are thinking maybe they're not going to need it. But to be honest, it's not really a big thing for euro at the moment. So,
You're saying that, though. I wonder how euro would take that, though, because you got to think, obviously, everything at the moment is just so mixed. It's so backwards, we want more QE, which is more euro positive, but in theory, it's not. Remember, everything's having the reverse effect. So typically, with dovish ECB, more QE is negative for euro traditionally, but markets have been seeing it as we want more. If you don't give us more, then it's euro negative. So I just wonder how markets may sort of perceive that to be. I don't know.
Yeah, I don't know. That's an interesting point. I guess we'll find out in the coming months.
Yeah, exactly.
Yeah. To be honest, though, whilst you're talking about everything being in reverse, that's probably a good time to talk about the BOC, because we had Bank of Canada earlier in the week as well. They were dovish, but CAD loved it, didn't it?
No, it's so true. I know. As soon as I read the statement, I was like to the members, this is a dovish statement, clearly. But CAD just went on a mad one. It's like, I'm rallying. Like, and it rallied quite decently, like a good 50 pips or so. It's quite a decent run. And then, but why?
Dude, I don't know. I think it's literally what you were saying with euro. Like, markets want more, so more stimulus is better. But I mean, I didn't really realise that was going to be the case for CAD. But apparently it is. Yeah,
no, it's fair enough. Yeah, that's a good point. Okay, so move on. What else? Let's just talk about the data this week. I mean, I think it's been a little bit mixed. I think the UK initially, I thought, was quite underwhelming. The GDP number, didn't really demonstrate that V-shaped recovery as such. I thought it threw a spanner in the works. It was quite slow, really, wasn't it? Because the markets were expecting 5% on a month-on-month, and we got like 1.8. It was 1.8.
Yeah, 1.8. Yeah, I know. I mean, it's not good. But the thing is, I think you probably shouldn't look too deeply into because that was for May.
Yeah, true.
And in the UK in May, the lockdown was still quite strong. Like, we hadn't really eased lockdowns yet. So I'm more interested to see what happens with GDP in June and July, because by now we've actually eased lockdowns quite a lot. So hopefully you'll see that GDP bounce back.
Yeah, at some point, I still think there might be a bit of a lag or delay, just because we were still quite late at doing everything, weren't we? And we've only recently just started lifting, like, for hospitality, which is still getting hit at the moment. So I think it probably will take some time for this recovery, to be fair.
Yeah, true. Agree.
Today, Friday as well, I just saw some comments coming down. Governor Bailey, he is the governor, isn't he, Andrew Bailey? Bailey?
Yeah.
Yeah,
Bailey.
Yeah, he was just saying that about the willingness still to explore more, that they can still do more, the Bank of England. So, it's needed. I think it's needed. I think we definitely need to do something,
Definitely. I mean, you got to remember, like, the Bank of England are conducting this review of negative rates, which is going to be finished. We don't actually know when it's going to be finished, but it could be a couple of months. So we could have negative rates soon.
Oh God, that would be interesting. Oh,
yeah,
be very interesting.
Dude, I don't know.
I don't know how to take that one, but we'll see. And then, to be honest, really, dude, that's really it. Chinese GDP, a little bit better than expected, but you can never trust what I hate to say it, but you can never trust their numbers, can you? Can't trust their data.
No, never.
Oh, but yeah. Well, what's going on next week? It seems generally light. There's a few things in there. Manufacturing PMIs.
Like I said, PMIs on Friday for Eurozone and UK. That'll be a big driver. We don't have any central bank action, but we do have retail sales from Canada, UK, and Australia. And we got a couple of CPIs coming out as well. I think Canada's got CPI.
Yeah.
And yeah, I can't remember everything off the top of my head. So yeah, a few tier 1 data points. No central bank action really, but a couple of speakers though, so we'll be listening that for them as always.
Nice. Reckon this dollar trend still going to be continuing to the south?
Yeah.
Looks like it, doesn't
definitely.
It looks like it, dude. Yeah. Cool. Nice. Well, dude, that's pretty much it. Covered pretty much decent ground now. Nice. And yeah, nice one, dude. Other than that, thank you. Let's get it.